Heiken Ashi candles are a modified way of displaying data on your candlestick chart, most notably the ability to smooth out volatility of a currency pair, allowing you to build more sophisticated trading strategies. A typical candlestick chart will both show the overall trend and how volatile the markets were in a particular candlestick itself. Heiken Ashi smooths out the price action on a chart by displaying values, using averages to create something that does look very similar to the candlestick, but without a lot of noise. The main purpose of using the Heiken Ashi indicator is to see past the choppiness and volatility that is so common in the markets. The Heiken Ashi candles will apply a mathematical formula in order to give a clear picture of whether or not the market is in a bullish or bearish trend. How Heiken Ashi is calculated. While the traditional bar or candlestick chart plots the open, close, high, and low of a time period, the Heiken Ashi calculates these values slightly differently. The Heiken Ashi formula used to come up with the average values on each candle is open of candle, open of previous bar plus close of previous bar, 2 close of candle, open plus high plus low plus close, 4 high of candle, the maximum value from the high, open, or even close of the current period low of candle, the lowest value from the low, open, or close of the current period. Using Heiken Ashi, as with a conventional candlestick chart, you can use the Heiken Ashi on any time frame. While they can come in any color, the standard version with the uses red for a bear candlestick, while it will use white for a bull candlestick. In order to use Heiken Ashi candles on the MetaTrader 4 platform, you go to the pull-down Insert menu, click on the Indicators submenu, followed by the Custom submenu, and choose Heiken Ashi and APOS. One advantage of the Heiken Ashi indicator is that in a downtrend, candles tend to stay red, while in an uptrend they tend to stay white. Normal candlesticks will sometimes alternate color, even if it is against the overall trend. You may have a couple of random hourly candlesticks that are slightly bullish in an overall bearish trend. This can make the look of the trend a little noisier than what is either useful or necessary. There are 5 main signals that identify trends using Heiken Ashi. White candles with no lower wicks indicate a strong uptrend. White candles in general signify an uptrend. Candles with a small body surrounded by both an upper and lower wick suggest that a potential trend change may be presenting itself. Also, known as a doji. Red candles indicate a downtrend. Red candles with no higher shadows indicate a strong downtrend. Notice on the chart above that where the white arrow highlights, there are multiple white candlesticks in a row that had no wick on the bottom. Finally, notice that the red arrow points out several red candlesticks in a row that have no upper shadow, showing a very strong downtrend and change in attitude. Note that when there are several long wicks in a row on one side of the candle, it can present that there is a significant amount of pressure building in the marketplace. For example, when you see several red candles with long wicks on the bottom, that shows that buying pressure is starting to build. Ultimately, if you see several white candlesticks in a row that have long wicks to the upside, it also can suggest that selling pressure is starting to make its presence known. The wicks suggest that the market was moving in a direction, but in the case of the downtrend found buyers that managed to push back up, and of course vice versa for an uptrend. Most traders will use Heiken Ashi candlesticks to keep themselves in a trade much longer once a trade begins, choosing not to change their position or close out until the candlestick changes color. For example, if there are 4 red candlesticks and suddenly a white candlestick appears, then a trader who is short of the market may close out their position, or even possibly go long at that point. Remember, the candles are meant to change slowly, so the fact that they do suggest something important could be afoot. However, for those that are more aggressive, the fact that a candle has wicks on both sides of it, or form a doji, will kick off a potential trade in the other direction. It is a matter of personal preference, but it should be tested in a demo environment if you wish to try it out. This is true not only with Heiken Ashi, but any indicator or strategy. Some things to keep in mind with Heiken Ashi systems. Because the candles tend to leave behind smaller corrections and consolidations, this means that when the direction changes on a Heiken Ashi graph, it's likely a larger trend change. The ability to filter out the noise of a trend has a major effect on how you can exit a trade. For example, the chart below shows an uptrend that eventually formed a couple of long wicks at the top. After those candles, the next 3 were red, while the second and third had no wick whatsoever on the top. This shows that the color change quickly identified the change in trend as the market dropped from there. The more candles you see without a wick going against the trend, the more likely the trend is to continue. If you see a large majority of bullish candles without a lower wick, this shows just how much bullish momentum there is in the market. This allows you to be more confident in the trend, and therefore hang on to a profitable trade, the very essence of what makes a profitable trader. Obviously, the same thing applies to a downtrend that features multiple red candles without a wick on the top.
I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign. I feel like I'm losing my mind.